Well, if you look at percentages, of course, in a way it's a little disappointing from our perspective. But if you have a look at the real events behind the numbers, firstly, the currency was against us, which cost us about 2.5 percentage points in headline earnings. We had very bad weather in England during December month, which cost us a lot. We had bad weather in Central Europe, which cost us a lot in ice cream sales and STC. So, yeah, by and large, I think a reasonably good performance, but looking at it just at the face of it, it may be a little bit underperformed.
Of course, in your full year results release back in August, we saw that solid demand from emerging markets standing out as a feature and offsetting some of the impact of the stronger rand. It's come to the fore yet again. Run us through that growth scenario as you see it and what it's spelling for Bidvest, because we've got a few getting slightly nervous about what potential tightening in China, for example, or about what rising oil prices could mean for that emerging market growth story.
Yeah, I think obviously the share price movements, and there's obviously the fundamentals. And just talking about the fundamentals, I think what we did experience during the first 6 months was very little price inflation. In fact, in food, we had price deflation. I think since November, December, we're starting to see price food inflation and general inflation. Obviously, the oil price is going to have an impact. We've had electricity, we've had a whole lot of other things. We've managed to control expenses very well, but a lot of it will now start to manifest itself, in my opinion, in prices. So inflation will be good for us in rand terms, no doubt. It gives us an ability to trade better. Pass on prices will be a little more easy. Yeah, so I'm anticipating that the second half will be good, and not saying brilliant, but will be good.
In Asia, it seems to be that rising demand for catering services really driving much of that momentum, right?
Yeah, I think especially Hong Kong, China, I think a lot of five-star facilities, and that's really where we are at. So I think, yeah, we will continue to see growth. The business is growing well there.
Well, you've expanded into that arena a little bit more aggressively in Europe as well, having acquired the UK's seafood holdings in December. Some would question the merit there where, you know, the euro economy is still not out of the woods. We had UK GDP numbers, in fact, coming in worse than expected just this past Friday. On the other hand, some saying don't underestimate Europe. Your view?
Well, Europe has got lots of people and they will all continue to eat, and that's obviously our business. So we don't have 100% of the market, and we have to concentrate and develop, in expanding there. I think for us, we're trying to move a little more away from the logistics aspect of food service, more into the foodie part of it, and therefore the seafood holdings piece will help us with more food-related product than just pure distribution and logistics.
While growth and expansion happens that way, I mean, we've got that stronger rand still posing quite a big challenge. We had it break below 7 yet again Friday and today. Your view on the rand and its current valuation, what would you like to see it at? What is fair value in your books?
Well, first of all, I think it should be weaker, but just to pick up on it, of course, you know, the rand has got various permutations. The dollar for us isn't really a big one. We're more interested in the euro and the Asia Pacific currencies. Those are the ones that impact us most. So I think we've seen obviously a weak dollar, but the currency, the rand against the other currencies in which we trade, has weakened a bit, and that for us is in rand terms will give us a better momentum for the second half.
Of course, on home ground, one would assume that a stronger rand holding you in good stead, where it's spelt lower inflation, and so the ability for the South African Reserve Bank to cut interest rates to its lowest in decades and fostering, you know, real economic growth in the country, and good news for things like your auto retailing component.
Yeah, look, I mean, auto sales have been better, but nowhere near where they were pre-recession and pre-credit act. So, you know, I know whilst I'm happy with the percentage growth areas, the rand numbers aren't as good as one would like to see. Yeah, look, South Africa, I think South Africa still has, is getting slowly out of the recession. You know, I know that the statistics say that we're out of it, but it's been very slow, and in certain areas, I don't think we've seen all the benefits yet.
Much of that growth story will be dependent on banks loosening their credit requirements as we progress along. There had been mention made that you would develop a separate financial services arm at one stage. Run us through the kind of traction that's gaining.
Well, our financial services is a little different to the banks. What we've done is we've tried to focus the old McCarthy financial services component piece into a more broad-based financial service offering. So where we were offering loans to people who purchase motor vehicles from McCarthy's, we want to offer that same ability for them to buy vehicles from anybody, get the finance from us for vehicles purchased from anybody. Same with insurance and the like. So we're going to have an internet-based financial services offering which will enable buyers of motor vehicles to get financing from us in partnership with Westbank in the main, and insurance in partnership with other insurance companies and the like. So we will develop over time a more significant broad-based financial services business.
Let's take a look at future business opportunities then, because putting your balance sheet to work has been a big focus. Bidvest has secured a major acquisition pretty much every year over the past decade. Potential acquisitions down the line?
Well, I think that the deal flows has picked up over the last short while. Of course, I think the asking prices are still high, bearing in mind, I think, the uncertainties in the markets in which we currently operate. But I think as time goes by, of course, like all markets, buyers will move up a bit and sellers will move down a little, and we'll meet in the middle somewhere. And I think our objective, of course, is to continue to grow the group by acquisition in part. But the main focus is to make sure that we organically grow what we've got and to generate the cash flows from the businesses in order to be able to fund our aspirations going forward.
What about returning capital back to shareholders, which seems to have become a bit of a rising trend, well, in the mining sector at least? I mean, you've been pretty conservative, in deciding what the dividend cover should be. You've declared a dividend this time round. What's your dividend policy?
Well, the return of capital to shareholders has been something that we've been debating with analysts, or being criticized, I suppose, even by analysts for 22 years. And I think if you take the record, I think that by and large, we've delivered beyond expectation on the surplus capital, as and when we've invested in acquisitions over time. So I think we have done some good deals over time, and we needed the capital to do that. I'm optimistic that we will get the opportunities coming forward again now and in the year ahead, and we will be able to utilize this capital. If we can't, well, of course, then we have to revisit the whole proposition of whether shareholders get more money back.